start of tax season, it's probably not a bad time to start thinking about how to ease the burden for next year. And it turns out that 2012 is likely to be a very, very good year to think about gifting. Big estate tax changes could be on the way in 2013 that make it especially attractive this year. Tom Crowley is Senior Vice President of PNC Wealth Management with the Wealth Management Group, and PNC Bank is, of course, a sponsor of our region's business. Welcome. Good to have you back.
Hi, Bill. Good to see you.
Yeah, this is really fascinating. I mean, the whole issue around gifting and estate tax and everything else has been on a seesaw, it seems, for years.
For probably a decade, it sure has been.
But we know for sure, at least we know what the rules are for 2012, right?
That's right. We have some rules for 2012, and over the last decade, we've really talked more about the estate tax than we have about the gift tax.
Okay.
But the gift tax is really important. It's an important, they work hand in hand, they work together. And so while right now there's a $5 million exemption for either spouse, husband and wives can exempt up to $10 million, so that's a big exemption. But there's a trade-off. It's either gift or estate. So if you give assets away during your lifetime, then at your death, Uncle Sam counts the gifts that you made against your $5 million exemption. So you don't get both.
Right.
So the strategies that really come to fore this year are a lot of the gift tax strategies, although both taxes will likely, if the administration, either the present administration or the next administration, doesn't make some changes, then we revert back to what it was in 2001, which is $1 million. So there's a lot at stake in 2012 from a planning perspective, and really I think one of the focuses there would be on the gift tax part of that. So this year, for people who are very wealthy, they have an opportunity to gift up to $5 million during their lifetime and have that exempted from tax. Okay,
so if you're in that position, this is the year to really think about a strategy.
Right.
If you're in a position to be able to do that kind of gifting and have that. So is it only, though, for the very wealthy people that should be thinking about this?
No. In fact, anybody who makes a gift in excess of $13,000 a year technically has made what's called a taxable gift. Now, they don't have to necessarily pay tax on that gift. They should probably file what's called a 709 tax return. It's one of several types of tax returns that can be filed for a gift. But it doesn't mean they'll be subject to tax. It just means that at their death, if there is a federal estate tax, those gifts that they made in excess of $13,000 would be counted against them.
Okay.
So again, we get back to that interplay of a gift tax and a death tax. And so that's one of the reasons it's so interesting this year. Sometimes you would think, why, if both taxes work together, if the gift tax works together with the estate tax, well, then maybe it's not such a big deal. I get one or the other at my death. And there's some logic to that. But one thing that's really good about the gift tax is whenever you've gifted something out of your estate, you also gift out the appreciation on that asset. So you don't hold it any longer. Somebody else holds it now, and it's out of your estate. So you're not just making the gift, but you're gifting the appreciation, and that can be very powerful. Okay, so and this business about the $13,000. So you can give $13,000 though without having any of this in play to what? Anybody you want? Any one individual? Yeah. So when we're a check? That's correct. So when we're talking right now, we're talking about gifts to individuals. So you can gift $13,000 to anybody you want to. No gift tax issue at all. And if you're married, you can split the gift and you can give $26,000 to anybody that you'd like. In addition to the $13,000 gift tax exemption, Uncle Sam also has a couple of other benefits. You can pay somebody's tuition so long as you pay it directly to the institution where they're going to school. You can,
and that doesn't count.
And that doesn't count against anything.
Wow, okay.
You can also pay somebody's medical expenses so long as you pay them not to the insurance company but to the provider of those medical expenses. And so those are ways for people, regardless of where you are on the scale. As you said, does it just apply to people that want to make $5 million gifts? No. It can apply up and down. So gifting is always something good to be thinking about.
Well, and just last question too. Grandpa, grandma, they got a lot of money and they like to do something to help, but their kids are okay, right? They're grown up, they're doing all right. They don't really need the help. They'd really like to get the money to their grandchildren in some way, shape, or form. Is that possible as well?
It sure is. It sure is, and it's called a generation skip. And the federal government sometimes looks at generation skipping and says, we want to be able to get a bite of the tax apple at the first death, and when it goes to your kids and then to your grandchildren. But those rules have been relaxed as well. So if Grandpa and Grandma want to make a gift to a grandchild, they typically will talk to their kids and say, "You okay with this?" Maybe not all the time, but maybe they're going to say to them, "I think you're going to be okay. I don't want it taxed in your estate. You're probably going to give it to the grandkids anyway. Let me do that.
Okay.
Let me make that create that benefit for them."
And so right now it's possible to do those. It's much more possible to do those sorts of things. That's sort of
That's
the lesson.
correct.
I guess the lesson for everybody, no matter how much money you have,
That's
is this
right.
is something you really should look into seriously this
That's
year.
right, and with bigger numbers as well.
All right, Tom Crowley from PNC Wealth Management. Good to see you again. Words to the wise. Appreciate it.
Thank you, Bill.
And we'll be back in a minute with a little more dollars and cents. Stay with us.